What is going on, everybody? It's your boy C-Zar with C-Zar Gets Crypto. I've got a very special video for you guys today. My last video, I discovered something actually in the midst of making the video, and I did some more research afterwards, and I want to present it today. I think I have discovered the secret hidden treasure map to this bear market. I could be wrong. I've been wrong before. I'll be wrong again. I've been right before. I will be right again. Let's get into it without any further involved. Okay. Hey, babe. So there's, I've got this little fib pulled up here, whatever. We bounce off the 618, whatever. That's significant. I feel like that's expected to bounce off the 618. This is not what I'm trying to talk about today. What I'm trying to talk about is if we go to, what is it? ElliottWaveForecast.com. Thank you, Google search saves, recent history, whatever. We look through here and go to resources, Elliott Wave Theory, and we look up corrective waves, right? We were at the ZigZag yesterday. I've been talking about for months now. I've been talking about this formation here. You can go back to a lot of previous videos I've made on Bitcoin, and I have identified this pattern several times. Whenever I last talked about it, probably in October, November, whatever, I definitely thought that we were going to go lower because this fifth wave, it's not a conventional fifth wave. Normally the fifth wave is at least as long as the first wave. It's not normally the smallest of the impulse waves, but this one is. It's smaller than wave 1, it's smaller than wave 3. Wave 3 is normally the biggest, but wave 3 and 5 are normally the two bigger waves. So it's not common to see wave 5 being this low. So I did think while we were down here that we were going to go lower. I definitely did think that. And I was proven wrong. But I want to show something. I want to show you guys something here. And I'm going to, real quick, I'm going to change the format of this so that it looks a little bit more visible. We'll make it white. I like white because it just stands out. I think that's fine. I think just like that's fine. So I'll delete it now. So we're gonna do some homework real quick, okay? So right here, again, if you go to ElliottWaveForecast.com, there's probably a bunch of different websites that have Elliott Wave information on it, but if you're on this one specifically, you're all the way at the top. I'll go back. ElliottWaveForecast.com. You scroll down until you see resources. Click Elliott Wave Theory. You're going to scroll. We're not looking at the Fibonacci. I already know how to do that. We're not looking at motive waves. We're not looking at Elliott Wave personality. We're going to go look at that. But right now we're going to look at corrective waves. The ZigZag. Classic corrective wave. And let me see, there's the ZigZag, which is a 535, the flat, which is a 335, the triangle, which is 3333333, double three, triple three, a combination of two corrective wave patterns, a combination of three corrective wave patterns. So this ZigZag is what I believe Bitcoin's in right now, and I think we are 2/3 of the way through this pattern. The first one, all the way down, is to a T exactly what you want to see when looking for it, and we're going to go over it right now. I want to see. Let's see here. ZigZag is a corrective three waves structure labeled as ABC. This is your A wave. This is your B wave. This is your C wave. Inside these waves, you have a 1, 2, 3, 4, 5 leg count, an ABC correction, a 1, 2, 3 count, and then a 1, 2, 3, 4, 5 final drives down. All showing that the 5 legs is A, the 3 legs is B, and the 5 legs is C. If this doesn't make sense, just follow with me. It'll make sense. You just got to use your seeing eyeballs. I promise you. This is really exciting stuff and bearish. It can be not exciting if you're heavily invested, but I think it's important to see. So without any further ado, let's just verify what we're looking at. Okay, so Fibonacci relationship. This is for a impulse wave, just a classic impulse wave, okay? Which I believe wave A was a classic impulse wave. Fibonacci ratio relationship. We did this yesterday. I'm going to do it again. So wave 2 is 50%, 61.8, blah, blah, blah. of wave 1. So here we are, wave 1. Wave 2 is one of those numbers of wave 1, so from top to bottom, wave 2 literally to a T, to a perfect T, goes to the 0.5, the 50% level, interjects. Requirements, fib ratio relationship. Wave 2 is 50%. 618, blah, 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 whatever. It could have been any of these numbers, but it was 50%. Right on the money. Like, couldn't have been more perfect. Rejected it. Wave 2, verified. For sure. No debate. Wave 3 is 1618, 200%, 2618, or 323.6 of wave 1 to 2. Okay. So if we measure from the bottom of wave 1, right, the extension here from wave 1 to 2, we can see, that wave 3 is 2618%, literally 2618. It is on the dot. Couldn't be more perfect. Couldn't be more perfect. Bounced. So wave 1, wave 2, wave 3 so far, beautiful, beautiful. And there's more personalities to this too, guidelines. Wave 1, 3, and 5 subdivisions are impulses, and we can see that. Wave 1, wave 2, and wave 5 are the impulses down. Wave 1, wave 3, and wave 5. Wave 2 and wave 4, wave 2 can't retrace more, or let's see, wave figure the impulse, well, I don't know. Let's see, the subdivision. Okay. Wave 2 can't retrace more than the beginning of wave 1. Okay, well, it didn't retrace more than the beginning of wave 1. Wave 3 cannot be the shortest wave of the 3 impulse waves, namely 1, 3, and 5. Definitely not the shortest wave. It's the biggest wave, which is classic. That's actually classic. That's what ideally wave 3 is normally. It doesn't say this. There's all kinds of definitions for it, but in my experience and from what I know about Elliott wave theory, wave 3 tends to be the biggest wave, if not wave 5. It's very rare that wave 1 is the biggest wave. It's not impossible. Wave 4 does not overlap the price territory of wave 1. Wave 4, this is wave 1 up here. Wave 4 does not overlap the price territory of wave 1. So that meets the qualification. Wave 4 is a blah, 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 but no more than a 50%. This means that wave 4 is going to be a weak retracement, right? It can be any of these numbers, but really what's important is that it's no bigger than 50%. So it doesn't have to be specifically any of these numbers. But let's see, wave 3. So from top to bottom, this is our wave 3. Start of wave 3 is at the ending of wave 2. Start of wave 3, end of wave 3. Wave 4 is just below the 382, which again, a 382 percentage, but really no more than 50%. And it does not overlap the price territory of wave 1. It meets both of those. It meets both of those. Wave 4, validated. Wave 1, 2, 3, 4, validated for sure. No arguing that. Wave 5. Wave 5 needs to end with momentum divergence. So I've got my relative strength index on here, the RSI, and there is bullish divergence forming, and so it's ending with divergence. I don't know if that's momentum, if it's a momentum indicator. I think that counts, but let's pull up something that is a momentum indicator that I know for sure is a momentum indicator, which is the moving average, the convergence divergence, the MACD. If we go back here, you can see the oscillator is coming up, the price is coming down. That is momentum divergence. You've got the histogram at a low here, and as we're coming lower, it's actually in the green. That is momentum divergence. So wave 5 needs to end with momentum divergence. It met that. There are 3 different ways to measure wave 5. First, wave 5 is the inverse blah 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 of retracement of wave 4. Okay, so let's do that, because that's actually exactly the standard that it meets. We go from wave 3 to wave 4. This extension here off of wave 4 to wave 5 is at 1272. It's just below. It really is bouncing basically right off the 1272. It held that line. It wicked below it, but it needs to be in between the 123.6 or the 1618. I use the 1272. The 123.6 is apparently another fib, I guess. I don't know. I haven't heard of it, but that's what they 123.6 sounds about right to me. It's probably 123.618 or something like that. But anyways, the 1272 is deeper than the 123, so it's definitely met this. It's not even a specific price. It just needs to be in this range of wave 4. And it definitely is. It definitely is. So waves 1, 2, 3, 4, and 5 are all validated to a textbook example of what an impulse wave is. This is an impulse wave, okay? And if we go back now, we go back and look at the zigzag. The zigzag is one impulse wave, one corrective wave, and one impulse wave to total this ABC corrective formation. It's a corrective wave in itself. So what we just did here, 1, 2, 3, 4, 5, we just completed this 1, 2, 3, 4, 5, the A wave. This is the A wave, okay? I don't know, we'll draw it there. This is, I guess, yeah, let's see. This is the A wave. Here's our B wave, and that would imply that we have a C wave. And the C wave, the third wave, is normally bigger than wave 1, than the A wave. And that would be pretty big. I don't know if it's going to go that low. I use the word normally because it doesn't have to go that low. Wave 3 really just needs to be longer than wave B. Wave C needs to be longer than wave B. And it can meet those qualifications even at like a $13,000 Bitcoin. This would look weird, but we're gonna, before I draw this on there, really, we're gonna look into this to confirm that it's a wave B, because it is a wave B. Wave B can be any corrective structure. Zigzag is a 5-3-5 structure. Zigzag is a 5-3-5 structure. So 5 legs, 1, 2, 3, 4, 5. B, right? Because that's A is 5, B is 3, C is 5. A, B, C. We have that. We have a 3-legged structure right here. A, B, C. Literally. Like, quite literally perfect. Just perfect. I mean, you can see it. I don't even need to have that on there. You can see it, right? And let's see. Let's go and look up what an ABC correction is. Now we're going to look that up. The textbook, at least on this website, what the textbook example is. So, Elliott wave A, B, and C. So, and this, by the way, this is not just for this. This is an A, this is a B, this is a C. This definition is actually going to talk about this whole bear market right now, okay? Wave A. Corrections are typically harder to identify than impulse moves. In a wave A of a bear market, the fundamental news is still positive. Well, when Bitcoin was dropping down here, it was hard to identify this as a wave A because we're only in wave 1 and 2. It's really, I didn't identify this structure until we were down here. And even then, I wasn't completely sold on it until we hit this bottom here. That's how I knew we were going to go lower than that. But, there's a lot of bullish information here. I still thought we were in a bull market. It's a higher low, off of a higher high. I still thought we were in a bull market. There were some people smarter than me who knew that we were in a bear market or called it a bear market by then, but very few people. Most people thought we were in a bull market. Most news was still positive. Not usually, it was still positive. Most analysts see the drop as a correction in a still active bull market, yes. Some technical indicators that accompany wave A include increased volume, rising implied volatility in the options market, and possibly a turn higher in open interest and related futures. Open interest, by the way, and futures markets were at the highest that they've ever been in this bear market. That last little sentence there for wave A, that open interest and in related futures markets, with increase in rising volatility and a turn higher in open interest and related futures markets, that all happened here. We saw the most. I mean, I'll go right now, BTC USD. Let's just go to longs if I can find it. Longs, maybe. Let me see, longs. Yeah, here we go. Longs. I mean, when did that bottom happen? Or when did we start going down? November 2021. I knew that. November of 2021. Here we are in November of 2021. This is when the bear market started, right? Increased futures related and open interests. You can see it, man. You can see it. It fucking took off. Pardon my language, Grandma. I'm sorry. meets this qualification of an ABC correction to a T. Increased volume. Increased volume. Well, this is the index chart. I don't necessarily like this chart, but we can see that, I mean, there was increased volume as we're coming down into this. Volume was increasing. You know, off the top here, we had no volume, and volume started to increase during this wave A. So I would say, like, the last volume that we saw was actually on this dump here, and volume was increasing, but volume died off on this move up. Volume increased in the markets again once wave A started. So I would say that in wave A include an increase of volume is true. This chart isn't even the best chart to go off of. I like to do the USDT chart on Binance whenever I'm talking about volume, and you can see it. Increased volume on wave A. Here it is. This is wave A right here. This is wave B. Wave C has yet to happen. We are in the midst of wave C, actually. We're going to get to it, guys. I'm so jacked right now. And I'm sober. So, increased volume. This is the biggest Binance USDT. This is the biggest exchange for crypto in the world. They have the most volume out of any other exchange. So their volume reading to me is the most to take into consideration. Whenever we're looking at this, wave A includes increased volume. There's no denying it. There's no denying it. And here, wave B, there's actually some pretty high volume too. But let's see. Prices reverse higher, which may see as a resumption of a now long gone bull market, right? People are calling this the resumption. People are saying right now, in my video yesterday, we went on Twitter, we went through and counted like 18, or it was 15 to 3 bullish posts, 15 bullish posts to 3 bearish posts. People are definitely assuming that we're in the resumption of a long-term bull market or a long gone bull market. Those familiar with classical technical analysis may see the peak as the right shoulder of a head and shoulders. So you might see the peak by the time you see this right shoulder of the head and shoulders reversal pattern. The volume during wave B should be lower than in wave A. By this point, fundamentals are probably no longer improving, but they most likely have not yet turned negative. And fundamentals definitely were not improving. And it looks like there was more volume here, like a larger spike on this one right here, but volume died. Volume died dramatically down here. It actually decreased incredibly once we were up here. This is part of wave B still. And we did have an increase, but even here, this is the beginning of wave B, even up till this candle here, just from here to here, did we have increased volume. While we had these increased levels of volume all the way from here, all the way down. It might look like, and we did have a higher spike in volume 1 week during this, but truthfully, the volume has been decreasing. And if we go, I wonder if we go on a monthly, if that'll show. Yeah, the volume has decreased. Wave A, you can see it, right? Here's wave A. Here's where wave B starts, is where this low point in volume is. Wave B definitely has less volume than wave A. It's got all this too that include, like, it definitely has less volume than wave A. Though on the weekly standard, it might look confusing, but if you really look at it, even though these are lower levels than over here, there's more of it going on. Where here, before this, died off. After this, died off. It was abysmal. And that's why we looked at the monthly. I wonder if we look on the daily if it's more visible too. Yeah. Wave A, increasing volume. Wave B, decreasing volume. You can see it. So the weekly looks a little bit, and I mean, if you really look at it, it's not confusing, but at first it might look like volume's increasing. But this is why you got to look at different time frames. And using the biggest exchange in crypto in the world with the most volume, this is to me the most solid evidence of volume, the best thing to go off of when comparing volume. Anyways, I'm getting off track. Wave B, blah blah blah. Fundamentals are probably no longer improving, but they most likely have not yet turned negative. Fundamentals have not been improving. And things have yet to turn negative, but they are starting to turn negative right now. We are starting to see it right now, actually. This downturn is just further proof of that. And I've gone over that in other videos, but there's a bunch of indicators that are just verifying it. They have yet to turn negative. We moved sideways. They've yet to turn negative. You know, there's no negative confirmation yet, but there's one thing I want to talk about right here. Familiar with classical technical analysis may see the peak at the right shoulder of a head and shoulders reversal pattern. It's textbook, man. I can't make this up. I literally can't. I'm not lying to you. I'm reading it and showing it to you right now. People started to identify this top as the top once we hit the right shoulder. People are calling this a left right shoulder. This is a head and shoulders. I can't draw it on here. I'm going to try. This is a head. That's your left shoulder. Here's your head. Here's your right shoulder. Right there, right? Left shoulder, right shoulder, head. People identified this as the top once we had this right shoulder. That's what a lot of people did. And they thought, you know, like whatever, we might go down lower just a little bit and then keep going up. Like people are still bullish on this thing. But I found it crazy when I read that those who are familiar with technical analysis may see the peak as the right shoulder of a head and shoulders reversal pattern. The peak of wave B, as is described right here, is a head and shoulders reversal pattern. It is, like textbook. And there's no volume. There's no volume at all. Like nobody, it got pumped up here. There's no volume. Nobody's buying here. It's going to drop. It's at least going to go back down, but man, it's going to go lower. I used to think we were going to go slightly below this $15,700 level, $15,500 level. We were going to go lower. 10K at a minimum. 10K at a minimum. 6K is a possibility, and I will prove it to you. So, wave C. Now we're on to wave C, which hasn't yet happened. We are in the beginnings of wave C. If it has happened, it technically started back here. But everything we've gone over so far, this whole wave A, the whole wave A description, the whole wave B description, all of the fib comparisons. Let's see, where is it? Right here. All of this stuff, everything up here in the guidelines, everything is textbook. It's all textbook. It literally, I'm not just speaking out of my ass here. I'm showing you, you know, like ElliottWaveForecast.com, whoever these people are. Look up other Elliott Wave stuff. You'll see that this is stuff that is true. And it might not say the exact same stuff, but more or less very, very similar. And the thing is with Elliott Wave theory, it is very precise. It does have guidelines. It does have rules that it has to follow. There's not really too many exceptions. It's very rare that you see exceptions. And usually Wave C is the biggest, but it doesn't have to be. And in this, let's just keep going. So let's see here. Where are we? Right, we're going to ABC, right? Oh, did I pass it? I might have passed it. I don't know. I'm going to scroll back up so that I can find it again. I'm sorry. Bear with me here, people. Elliott Wave, ABC, here we go. So C, wave C, prices move impulsively lower in 5 waves. Volume picks up. And by the third leg of wave C, almost everyone realizes that the bear market is fully entrenched. Wave C is typically at least as large as wave A and often extends to 1.618 times wave A or beyond. Okay. That's scary. Volume picks up. Okay, let's see if volume's picking up. Let's just see. And we're on the biggest exchange in the world here for volume. We are starting to drop. It's picking up, but it's not like confirmed yet. We'd have to go lower, I think, before the volume comes in. But I would expect that we are going to see volume picking up. Again, we're in the beginnings of this, so it's not easy to meet the qualifications for wave C yet, because we're in the beginning of it, man. We're in the very beginning of it. Let's just see on a weekly time frame if it comes up. Yeah, this is actually one of the lowest. This might be the lowest week in volume that Bitcoin has seen in a year and a half. We have 4 days and 6 hours left. That can change. If we see a spike in volume, if it gets above this green histogram, volume is definitely increasing. If it gets above this right here, volume is increasing. As we're going down, which is never good, but it's starting, that would start to validate that wave C is, at least one of the qualifications is meeting this, whatever. If this is a wave C, if this is a 5-leg correction, typically is at least as large as wave A and often extends 1618 beyond wave A. So let's look at what that would look like, okay? Let's look at what that would look like. What is it saying? What does that mean? Let's look at it. So if it's typically as big as wave A, remember this is wave A here. This whole 1, 2, 3, oops, yeah, there we go. 3, 4, oh damn it. Oh no, what did I do? 3, 4, 5. Okay, I must have clicked twice on accident. 4, 3. So if this is wave A, wave C is typically as big as wave A. So let's do that. Let's do that. Let's measure from here to here, and I'm going to adjust this real quick. I don't know. Let me see real quick. No. That's the wrong thing. Come on. Hey, come on now. What are you doing? My laptop is glitching. I'm sorry. Extend left, extend right. We don't need the lightsaber on. We just need the distance. So that's wave A. This is the wave A's length. So wave C is typically as big as wave A. I even put it a little bit higher. Let's get it right to the frickin' nose there. That's right on the nose. If wave C is a typical wave C, and it says typically, that means it doesn't have to. It doesn't have to, but this is what's to be expected. Typically at least as large as wave A. Doesn't mean it has to be, but typically this is what you expect in this kind of structure. And often extends to the 1618. So as long as wave A means it's the 1. Ignore the 618. It's 1 times. It's the exact size. If it's an extra 61.8% of that length, that means it's going to go lower. This right here would put Bitcoin at a price that is below 7,000, right around 7,000. I want to put a line there. Let's put a line there. And man, I didn't think Bitcoin was going below 10K, but I'm convinced now that it will. This, I guess there's not really a lot of support, honestly, on this area. So if it was to go lower, a 1618, you know, maybe it goes down here, maybe it comes down here even. And guess what? Low, this is a higher low. Even if it went all the way down here, it's still a higher low. Bitcoin is still bullishly postured. I want to draw another line here. Another line. This time we are going to pull out the lightsaber. We're going to do extend left, extend right. Oh man. Okay. Look at that. This line literally meets this trend line, like to a T. And this is if it's a typical wave C, whatever that means. This is what a typical wave C would look like. And it just coincidentally comes down to this trend line that Bitcoin has now had for 5 years. Crazy coincidence. Maybe it doesn't go this low. Maybe it doesn't come to this blue line. But let's see. It did say a 1618 of wave A. What does that look like? Let's see. So from the bottom here to the top, oops. A 1618 would put it down at 269. That's not going to happen. Sorry to all the bears. That's not going to happen. I'm not here to tell you that it's going to go that low. Maybe I'm using the wrong tool. We'll bust out the fib extension. Here it is, trend-based fib extension. So wave A here, let's see. You know, that's wave A, and then we put it up here. You know, the 618 here is at, oh no, so that's the 1618. So I don't expect a 1618 to happen. The 1618 is down below 3 grand. Anything's possible. I very much doubt that that's going to happen. In fact, this to me looks more possible. Bitcoin does not have to go this low. It does not have to go so. If it was to go this low, look at when that is. That's in April of 2024. I don't think anybody would expect that. Because that is when the next halving cycle is going to happen. The next halving for Bitcoin is going to happen in that time. Everybody thinks that we're in a bull market right now because we are less than a year away from the halving date. And any time in Bitcoin's history, every single time in Bitcoin's history before this, we have bottomed around a year before the halving date. And let's go through and look at that actually. Let's see. Bitcoin halving dates. Yes, dates. So let's see if there's Bitcoin halving date history, stormgain.com, whatever. Bitcoin halving of 2012. Here we go. 28th of November 2012. Let's look at it. This is the all-time history chart, the BTC USD. If you didn't see me pull it up, BTC USD, the index here. This has all the historical data that we need for Bitcoin that's possibly visible for Bitcoin. 2012, November 28th, was it? November 28th, 2012. I'm going to use a vertical line here. You know what? We're going to use a circle, actually. We're going to use a circle. I like circles. November 28th. So during this week here, that was the halving. Right there. Okay? So here's the halving. You know what? I guess I will do a vertical line. Vertical line. The week of this right here. That's when the halving happened. If we were to measure a year before this date, guess what? That's the bottom. 378 days before the halving, about a year, literally within 20 days of a year, that's when it bottomed. Okay? And this trend continues, guys. This trend continues. If you know what I'm talking about, you know what I'm talking about. Let's see. The Bitcoin halving of 2016 happened on July 9th, 2016. We're going to draw another vertical line on July 9th of 2016. So here we are, June, July. We're doing the week of, not the exact day. July. This is the week of July 4th. This was a year, or this was the halving date. Let's measure where from here, where the bottom was. This was the low, right here. 322 days. About a month away from the halving. So, about a month from a year from the halving. So this was about a year still. 322 days, 378 days. Comparable enough, but not quite vindicated yet, right? Let's keep going. Let's keep going. That's only 2 iterations. Let's keep going. The last halving date that we had was in 2020, May 11th, 2020. I remember that one. I missed the pump in May of 2019. Should have known, but I didn't. May 11th, 2020. Oh yeah, COVID. That's right. That's right, man. That should have been the COVID crash with the halving involved. Like should have been an indication. So wait, did I say May 11th? It was May 11th. So this one's actually like right on the start. This week actually started on the halving date, which is cool. The bottom of the bear market happened. Was it here? Yeah, it was here. 518 days. Let's go on a monthly basis just to see. Yeah, okay, so a year and 5 months, 12 months, and then 11 months, okay? A little bit over 11 months. So basically we have a range of 11 bars to 17 bars that Bitcoin has dropped before. The next halving is projected to be, the next Bitcoin halving date around 2024 is what it says. It's projected to be at the end of April. At the end of April. That's when it's projected to be. So let's draw that. The end of April 2024. Technically this is that's 2025. We are a lot closer. April 2024. If we were to measure from this line to the current low of the bear market, current low, come on now, one more, there we go, 17 bars, which is exactly the amount of bars we had in our last bear cycle. I don't think that we're going to pull a repeat. I've been skeptical of this since I saw it. I don't think we're going to pull a repeat. It meets the range, it meets the qualifications that we've seen previously. It makes sense. We've had this bounce, but I want to show you something. I want to show you something. From this bottom to when the halving happened, we had a 534% pump. Okay, not even actually. Let's not even do that because we're not at the halving yet. We're at, let's see, we're at 1, 2, 3, 4, 6 months after the bottom. 6 months after the bottom. So let's measure 6 months after the bottom now. Okay. I'm going to keep all these up. I am going to delete them as I go, but let's go to 6 months after the bottom. 1, 2, 3, 4, 5, 6. Okay, so the high was actually before 6 months, 262%. Okay. Here we go. I'm gonna delete this because we already verified that. From the bottom, within 6 months, 211%. Here we go again, deleting that one. From the bottom, 1, 2, 3, 4, 5, 6 months on the dot, 343%. You know, even if it wasn't 6 months, even if it was 5 months, 191%, around 200%. But within 6 months, they've all gone up that much. Here we are. Here's the bottom. 1, 2, 3, 4, 5, 6 months. So on the 5th month, we were at our high. 100%. 100%. Less than half. And if we want to do it by 5 months, we can do it by 5 months. Let's cherry pick. About half, a little bit over half of what the smallest gain has been. People are saying that this bear market is just like any other bear market, man. They're saying it's just like any other bear market. We have had, and they're using this pump as an explanation, like, oh, here we go. It's pumping around the same time as it does every time, right? It looks like it. But what's different? What's different? I'll show you what's different. I'm going to delete all this now. What's different, because we've looked at it already. What's different is one top, 2 tops. That's what's different. Weak pump afterwards. The weakest pump by almost half of the amount. The weakest pump that's ever happened in Bitcoin's history afterwards, after the bottom. Okay. We are in an world economic state of recession, basically. High inflation is rampant around the world. Everyone thinks the US dollar is going to zero, but I mean, hey man, we're going to go on a little detour here. DXY, this is the US dollar currency compared to everything else in the world. Let me show you when COVID started. You know, right? COVID, I guess, technically started in 2019 here, December. We went down a little bit, but the US dollar has only gained value. And in fact, this month, it's gained 2% in relative value compared to the rest of the world currencies. The US dollar is not going to zero, guys. The media wants you to believe that for whatever reason. Maybe they want you to sell your US dollars and get into things. Maybe that's exactly what it is. They want you to sell your US dollars for Bitcoins, for stocks, for hard assets, because we are about to see a huge, the recession has already started, but we're about to see a huge decline in all kinds of things. And the US dollar is only gaining strength, by the way. It's only gaining strength. It's on a upward trend, for sure. It's on an upward trend. I want to go back to Bitcoin here. Talking about why this market is different, okay? Double top, weak pump, the weakest pump in Bitcoin's history, and everybody's bullish. We're in the bull market. They're so ready to call it the bull market. And everybody on Twitter is saying that everyone's bearish. I did it yesterday. I went through. If you bared with me on it yesterday, you can check out my video from yesterday. Not my most recent one, not the shocking Bitcoin one, but the one I don't know, where it's got like the Bitcoin bear on it, not the red coin itself. I made 2 videos yesterday. Check out the one that has the bear on it. And you can go on Twitter yourself. Go on Twitter or Facebook or whatever social media you want. You will see there are more people, maybe not today, but for the last month, people have been more bullish than they have bearish. And everyone's saying that people are more bearish. I'm bearish. I'm not everyone. You know, I think everyone's bullish right now. I think a lot of people are indecisive one way or another, but everybody, I think, would agree that we're in the bull market. I think most people would agree we're in the bull market. A smaller amount of people would agree that we're in a bear market still. I definitely think that we're in a bear market still. In the list of firsts for Bitcoin, double top, weakest thing that we've ever seen. This was the lowest price in Bitcoin's history, or the lowest RSI reading in Bitcoin's history. Another first of why this bear market is different, right? Because everybody says that too. Everybody, all these pros like to say, and nobody's a pro. Nobody's pro. I'm not a pro. I'm not saying that these guys who are pros aren't pros. You know, they know what they're talking about. They're smart people, but they're wrong when they say that this bear market is not like any other, or it's just like every other bear market. They're ignoring the facts. This bear market is not like any other bear market. We're existing in world economic conditions that we've never existed before, experiencing rates of inflation with the world currencies that we've never experienced before. We have a double top, which we've never experienced before. We have the weakest bounce off of the bottom, which we've never experienced before. We had the lowest readings in the RSI, which we've never experienced before. People look at this and they think, oh, it's the lowest it's ever been. It must be a good time to buy. It's very counterintuitive, actually. When you're it's the relative strength index. This means that Bitcoin is printing off the weakest readings in its history. That's not a good thing. That's really not a good thing. Ideally, you want to buy at the weakest price points in Bitcoin's history. Yes, you do. And if you bought down here, you killed it over the last few months. Don't get me wrong. You killed it less than you would have any other point in Bitcoin's history, which I think says something too. But it doesn't stop there. We went above 50 and short-lived. We only went above it for 1-2 months, and then we came back, but we're below it right now. Unless this month can close green, unless this month can go all the way back up to $29,200 in the next 7 days and 6 hours, which I don't think is going to happen. We'll go over why. This is not normal either. Going below the 50, okay, we've done that before. When we come back up, off to the races. Going below the 50, okay, we've done that before. When we come back up, off to the races, right? We came back below it, sure, but not until we went above the 60, above, like up into this overbought area. We didn't get overbought, but we went up high. We even bounced off the 50 again. We bounced off it here. We've never gone below the 50, below the 50, up, below the 50, up, below the 50, up. We've never gone below the 50, come back up, and gone back below it without coming at least up to this overbought territory. Another first. There's 2 firsts happening in the RSI alone. This is the lowest that the histogram has ever been. This is the lowest that the oscillators on the MACD have ever been. It's the lowest. We've never had a bottom. Pardon me. We're gonna, as we go on, and of course the histogram's gonna get lower as we go because prices are just bigger. But we've never had a bottom. I guess we have. Okay, whatever. But still, the point remains. The oscillators have never been this low before. They've never been below the 0, ever, on the MACD. They've never been below the 0. They got close. They got really close. Oh, I guess the blue oscillator did go below the 0 here, but both of them have never been below the 0. There was one time that one of the oscillators went below the 0, but never in Bitcoin's history have both of them. And when I say oscillators, I'm talking about these lines. These lines oscillate between each other. Going up and down oscillators. That's what they're called. I'm sorry I'm so excited. There's a lot of information. I'm trying to get it in. I know this video is going to be long. I've got more to say, but there's a lot of firsts happening in this bear market for us to have never for this to be just like every other bear market. And I think that's where a lot of these pros are getting arrogant. They're just ignoring the facts. They expect that because we're less than a year from the halving that we're already in a bull market. But guess what? This bull market, this pump off the lows, has been the weakest by about 50%. We've never double topped. I've gone over all this. I'm not going to do it again. But we are showing things that we've never done before. Okay? Let me think. What else? What other things we got here? I don't know. Let's measure the bear market itself. Let's see here. From top to bottom. Oops. Okay, 12 bars. Sounds about right. I don't think that this is going to be a first, right? 12 bars, yeah. 12 bars there. This one here, 20 bars. This one here, less than 12 bars for sure. Okay, so we've never had a bear market. Never had a bear market that was longer than 20 bars. 20 months. We have never had a bear market that was longer than 20 months. If we are still in a bear market, which I do believe we are, right now we're in the 18th month. And I very much doubt that in 2 months from now we're going to be done dropping. I very much doubt that. I think it's going to be 6 to 10 months from now. Literally the ending, like November, December of this year, 2023, if not more likely, and I know it's close to the Bitcoin halving date, I know it sounds blasphemous, but more likely somewhere in, maybe even in April, maybe even the month of the halving, but somewhere in 2024, that's where I think the bottom is going to be. That's when I think I think this bear market will be, and we haven't gotten there yet. There's still not enough proof that this is a bear market yet. You can still call this a bull market if you want to. I'm convinced it's a bear market, but I can be wrong. So there's no validation yet. That the only way to verify that we're still in a bear market really is if we go below this line right here. Once we're below this line, we will be in a bear market. There's no denying it anymore. This was not the start of the bull market. There's no denying it anymore. Just like when we came down here and we held this as a higher low, there's no denying it anymore. We're in a bull market. You could have denied that we were in a bull market all the way down here, but once we had this low, this dramatic bottom, I was bearish. I thought we were going to go, a little bit lower. We didn't. And once we had this bottom here, there's no denying it. We're in a bull market. There's no denying it. If we go below this blue line, which I do think we will. Oh yeah, that's another thing. I'll bring it up. Another thing that's first, we have never in Bitcoin's history gone below a previous all-time high in a bear market. Here's the bear market. Here's the previous all-time high. Didn't go below it. Here's the all-time high. Here's the bear market, previous all-time high. Never gone below it. Our bottom is below the previous all-time high. That's never happened before. Never happened before. In a list of things that have never happened before in a bear market that's just like any other bear market. You gotta be kidding me. Okay? I'm sorry, guys. I'm getting worked up. I could see it in the pit stains. I'm getting worked up, man. I'm excited. This is the treasure map, man. I found the bottle floating in the middle of the ocean. I feel like I'm the only person that has this map, and it's literally a roadmap with this Elliott wave theory. We know exactly what's going to happen. We can expect, if this is a wave A, B, C, we can expect 5 more waves, 5 more legs. 1 wave down, 1 leg up. 1 wave down, 1 leg up. 1 leg down, 1 wave up. Anyways, so back to wave C. Volume picks up, and by the 3rd leg of wave C, almost everyone realizes that a bear market is fully entrenched. A bear market is fully entrenched. So by the 3rd leg, let's look at what that 3rd leg looks like. 3rd leg. Here's the zigzag, right? A, B, C. Here's the 3rd leg. 1, 2, 3. That's the 3rd leg right there. And you know why? Do you know why it says that by the 3rd leg of wave C, almost everyone realizes that the bear market is still firmly going? Why it's doing that? Because in a textbook wave C, the 3rd leg down is below the previous low. It's below it. And what do we have to do? This is the previous low in wave A. If we get below this line, ergo the 3rd leg of wave C, which we're in, it will be undeniable that we are in a bear market still. By the time we do that, everyone will realize that the bear market is still firmly entrenched. And I think that's going to happen. It's literally, the thing that has me so convinced about this, right? If you go back to the beginning of the video, if I've lost you at all, you can go back to the beginning. We have verified that, let me see here, that wave A to a T is exactly what it needs to be. That wave B to a T from every explanation we got is exactly what it needs to be. So wave C is the final piece. We have 2/3 of the pattern that aren't kind of there, I'm nitpicking, it kind of looks like that, let's go with it. No, it's validated. It is 100%. Wave A, wave B, it's 100% textbook. You can read it yourself on ElliottWaveForecast.com. You can go find your own books, your own websites for Elliott wave analysis. It's vindicated. It's validated. It's there. It's 100%. There's no arguing it. So 2/3 of this bearish pattern are 100% completed. 100%. We've got one more leg to go. And after 100% just textbook material on these, I would expect 100% textbook material on wave C. I would. And this would be shorter. If wave C is shorter, that would put it at 10K. It could go to 10K. I am officially convinced that it will go below 10K. That it will. And a zigzag is normally equal. It normally looks just like this, man. It can go lower. It can go higher. If it were to go lower before April of next year, I mean, you know, in December, that could put us at a low of 7,500. By April of next year, that could put us at a low of 8,000. You know, if not a little bit lower, we could go below this line. We could. It wouldn't even surprise me if we broke this line, and that was the bottom. When we just broke this line, everyone's going to think, "Oh God, it's going to zero," and then we hold it as support. You know, that's normally on the third attempt on a slanted line like this. You do see disrespect. It's false hope, this line, and then once it breaks, it's false hope that this line broke. It'll hold it and bounce off. And the thing is, what else validates this ABC corrective pattern? It's wave ABC corrections. We go back, right? We look at it all the way at the top. It calls it a corrective wave, right? Or Elliott wave personalities, A, B, and C. The zigzag is a corrective wave. It is a corrective wave. If this all plays out the way that I'm talking about it to, look at Bitcoin. Look at it. It's bullish. It's in an uptrend. It's got higher highs on higher highs, higher lows on higher lows. Even if it went down to $6,400, even if it went down to $4,800, it's still got a higher low. It is still in an overall bull market. That means that this whole bear market, regardless of where it ends up, unless it goes below this low here, which I doubt it. I really very much doubt that. I'm not calling for that. I'm not calling new lows. No way. New lows compared to here, but not macro lows. No way. When it does that, it will prove the same thing that every other bear market has had. The one similarity is that bullish correction, bullish correction, bullish correction, bullish correction. And that's exactly what the zigzag is. It's a corrective wave. And that's exactly what we're identifying right now, is a corrective wave. It's a very large corrective wave, and it meets it to a T. 2/3 of this pattern, man, they're vindicated. It's validated. It's all there. This is a corrective wave. And what makes it a corrective wave is that the trend is bullish. This wave is down. It's a correction. That's all it is. There's more things that are happening for the first time in Bitcoin's history, and I've addressed it in other videos. We're going to go to the MA exponential ribbon. I'm going to put it in the log scale so it looks pretty. This yellow line on the monthly time frame has always been above all these other lines. It's always been above it. You can see, no matter what, in the bear market, whatever. And furthermore, we haven't had a monthly body close below and open below, an open and a closing candle below the red line ever. But this yellow line, it gets really close. It gets really close right here, but it's still on top. Still on top. We get into this next bear market. Yellow line is still on top all the way through. And yes, we have a candle close below the red line. Yes, we have a candle open below it, but not one candle opened and closed below it. This candle opened just barely above the red line. You can see it just barely above it. This candle closed, but no candle opened and closed. We've had 2 months where we were below it. This one even went below. This one, you know, Wix, that's happened before, but we've never had a close or an open below it before. That's never happened. That was the first for this. But what's different about this bear market is we've got multiple opens and closes below it. We've never seen that before. We've never been below the ribbon this long on a monthly basis, never. And to start with the original point I was making with this ribbon, we've never had the yellow line cross below any other MA, ever. Ever, 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 ever. And while I am insanely bearish, while I feel like I'm gonna be proven right on all this, I don't think that this is a bearish chart. I don't think this is a bearish chart. This is the most bullish chart in the world for over a decade, almost 2 decades, going on a decade and a half actually. This is just bullish. Holding the yellow line up this long, it's bullish. Contracting is a bullish thing. And if and when Bitcoin goes lower in price, that's only going to make this contraction tighter. It's only going to make it tighter. So when Bitcoin does pump back up above the ribbon or into the ribbon, it's going to have a massive explosion up, which I do think is going to happen. It makes sense that after the biggest bear market in Bitcoin's history, that we see a massive recovery. That's just what happens. When you get the biggest downtrends, you get the biggest pops. When you get the biggest pops, you get the biggest downtrends. That's just how it is. Or the weakest pops even. You know, we had a weak pop on this bull market, and we had a double top. This should be a clear indication. I don't know why any of us haven't seen it before, that this bear market is going to be rough. It's going to be rough. The charts are showing it. It would be very sad. It would be very sad if this yellow line crossed below the red line. It can happen. It can be a false cross even. And if and when that happened, I would think that would mark the bottom. If this yellow line crossed the red line, that would mark the bottom. That's a clear indication that you should be buying. It might not do that. It might not ever do that. Don't look for that. But I'm just saying, what I'm really trying to say is we've never been opening and closing below this ribbon ever in any other bear market ever for this long. We've never gone above the ribbon and come back below the ribbon. And if what I'm saying is true, we are going to go back below this ribbon. We've gone above it and wicked below it. We've come back into it, but we've never gone above it and then found a candle that closed below it again until the next cycle. And that'll just be another first in this bear cycle out of many firsts that have happened. I feel like I've said enough. I feel like I've gotten the points I want to get across. There's plenty of more indicators that are showing first-time events that we've just never seen before in Bitcoin's history. Along with the world economic status that's going on right now, we've never been in this kind of economic situation before with Bitcoin. This bear market is different. This bear market is 100% different. Do not expect it to play out like any other bear market has, because it won't. It really won't. And you heard it here first. You heard it here first, man. Elliott wave, ZigZag, coming at you hot, man. We're in wave C right now. And by the way, this wave C structure, it meets the exact same guidelines as this wave A. It's going to meet the exact same guidelines as this wave A. So we're going to have 1, 2, 3, 4, 5 legs down. It might not look the exact same, but it will meet all of those qualifications, all those Fibonacci retracements that we went over in the very beginning of this video. It's going to meet all this. And if it happens again, if wave 2 and wave 3, and they will, meet these requirements, look like this, has these guidelines, it'll be undeniable at that point. We're already 2/3 of the way through this pattern, this ABC corrective pattern. It's going to happen, man. Okay, I got one more thing I want to talk about, because I've showed this on my other videos. On the weekly, we bounced off of a very bearish rejection. We had an engulfing candle here. We bounced, showing multiple bearish weeks. We have 4 days and 6 hours left. A lot can happen. If the bulls want any hope, you need this to cross up. You need this yellow line to cross up. And the only way that that's going to happen is if price stays above it. Price right now looks like it wants to go. When you get a bounce like this and then 2 weeks later you're back at the ribbon already, I do not have hope that we're going to bounce here. If price closes below this yellow line, that'll be a bad sign. If we get a candle that opens and closes below this yellow line, it's over. It's over. We're going to new lows, without a doubt, because this is just a contraction with price coming down below it, and we're going to expand. The last time we contracted and expanded, boom, all the way down. Contracted and expanded, boom, new highs. It's not a good thing to contract and then go below it again. That is just a bullish or a bearish indication that we're going lower. We topped this rally off with a bearish engulfing candle. It should be obvious. It should be obvious. This is a head and shoulders pattern. It should be obvious. But it'll really be obvious. It'll really be undeniable, truly undeniable, when we open and close a candle below this yellow line. On the daily time frame, we have a cross. And I was just saying this yesterday in my video, that if there's any hope on this daily time frame, it to me already is vindicated. It's already valid that this is a bearish cross on the ribbon. But if there's any hope for the bulls at all, they need to get above this ribbon, and they cannot close a daily below this lowest close here. Well, crap, man. Crap. We are looking like we're going to close below this, and this is looking like a bearish cross. You want to know what happened the last time we had a daily bearish cross? I'll show you what happened the last time we had a bullish daily cross. Right here. Went from 15,000 all the way up to 31,000. Bitcoin had its 100% pump. It was a good thing, right? Contracted, and then came back above it, just to show how strong these contractions are, right? Contracted. This was a false turn, and you can see it. It dumped immediately. The last time we had a bearish cross, Bitcoin was all the way up here at $43,000 at its high. We went from 43,000 down to 15,500. We had a total of, let's see how much that is. The last time we had a bearish cross, we had a total of come on now, I want it to be exact, 64% drop. If Bitcoin were to go, and this was the high after the cross. I'm not measuring the high leading into the cross. I'm measuring the high after the cross. So we're going to do the same thing here. I'm not going to measure these highs. The high after the bearish cross. The high was back here. So the high after this bearish, oh, I guess we didn't cross. So I guess this is the high after the bearish cross, even lower. Cool. If we were to do a 64% drop, where would that take us? I don't know if we'll do a 64% drop, but let's just look. Let's just compare it. Let's see what it looks like. 64%. Man. After everything we've looked at, is this not possible? Is this not likely? If the storyline that I've painted holds to be true, which 2/3 of it have been 100% accurate, is this not possible? It happened over here. Here, 64.5. Let's be nice. 64.02. There we go. It's on the dot, the same. Below 10 grand. Below 10 grand. 10 grand is not a significant level, guys. It's a psychological level, but it's not a significant level. I bet we see a larger drop than this one. I bet we do. Because guess what? When we had this, we didn't have, whenever that daily bearish cross happened, we didn't have the weekly contracting. Yes, a weekly cross happened, I guess, before the daily cross happened. We did have a fresh weekly cross, but we didn't have a contraction. The contraction is a more powerful signal, in my opinion. We didn't, like, it just, man, I don't know. I don't know what else to say. I'm basically done. I'm done talking about it. If you're in Bitcoin, you better be in it for the long haul, because in the short term, things are going to get wacky. Things are going to get real wacky. And you heard it here first. I know you heard it here first, because I watch all these YouTube videos, man. I watch all the popular people. Nobody is talking about this. Nobody's talking about it. And I do expect something exactly like this to happen. Something exactly like this to happen. It might even be lower than that. That puts it at about 8,200. And what we did in the beginning put it around like 7,500, right? I do expect that we will see this green line. We're gonna see it. We're gonna see it. We're gonna do one of two things with it. And I'll tell you what we're not gonna do first. We're not gonna bounce off it. We're not gonna have a perfect bounce off it. That's not what's gonna happen. We're gonna do one of two things. We're either going to bounce just above it. We're gonna bounce just above it because everyone's gonna have their eyes on it. Or what I think might be more likely at this point in time, when we get there, I might change my mind, but we'll see. We'll probably go just below it and then bounce. But we're not going to bounce right at the green line. So it's going to be option A or option B. We're going to bounce just above it or just below it. And following this fib, which has been textbook wave A, textbook wave B, if it's to be a textbook wave C, it would be just below this green line. You heard it here. I'm glad that I'm not in crypto right now. I'm glad that my money is sitting on the sidelines. Me and my family's money is on the sidelines. And if you're holding for the long term, hold. Just hold. It's okay to hold. If it goes from 20,000 down to 10,000, still hold. If you're not going to sell it now, why would you sell it at more than half price? Don't sell it, man. Don't sell it. If you're going to hold. Just buy more when it comes down here. If this video made you bearish at all, take a step back, breathe, do your own analysis, formulate your own opinions. I can be wrong. I've been wrong before. I'll be wrong again. I've been right before. I'll be right again. And I do think that this is going to be one of those times that I'm right. Anyways, this has been a long video about me bragging about the magical goose in the box that I discovered, known as the ZigZag Elliott wave pattern. If you want to look into Elliott waves yourself, you can go into it. It is a theory, Elliott wave theory, because it's not proven, but you do see these waves throughout all kinds of charts all over the stock and crypto world. It's a thing. They call it a theory. The guy, I forget what his first name is, but his last name was Elliott. He died poor. He discovered this theory and he died poor. So you can have the tools before you and still do it wrong. Just so you know. If you don't have proper risk management, you can still do it wrong. And that's what I'm talking about when I say if it goes down here, don't sell. If you're in it for the long run, be in it for the long run. Don't sell. Proper risk management, man. Because you can have the whole roadmap, you can have the whole theory validated to a T 100%, and you can still mess it up if you let your emotions get to you. This has been a PSA, public service announcement, for all of crypto. And I have such a small account that I feel comfortable sharing this because nobody will see it. And anyone who watches this, you're welcome. You've got the roadmap. You've literally got the roadmap. yeah. Anywho, take care. C-Zar signing off. Have a wonderful day, everybody.